Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Luke A., Mike P., Andy J., Dave V., and Jared W. Brand new guest on the program today, Mr. Owen Hegarty is on the show. Owen is the executive chairman of EMR Capital. EMR is a specialist resource private equity manager with extensive operational experience and a proven track record in successful mining operations, development, and investment. EMR has offices in Hong Kong, Melbourne, and the Caymans. You can learn more about EMR Capital via its website, emrcapital.com. Mr. Hegarty, welcome to the program.
Hey, good on you, Andrew. Lovely to be here. Thank you for the invitation.
Owen, do you have your favorite beverage in hand, sir?
Yes, indeed. At this time of the day, I've got my favorite beverage. It's a cup of coffee. Thank you, Andrew.
Well, thanks for taking the time, and a special thanks to our mutual friend, Craig Perry, for setting up this chat. Let's kick it off here, Owen, by telling the audience about your background and interest in the natural resource sector. Tell us where you started out.
Yeah, okay. Well, thanks, Andrew, for that and the opportunity to have a bit of a go with you on Smith Weekly, and congratulations to you on your extensive coverage and network podcasts so far. So well done with all of that. Look, my background, very simple. I mean, I've been in the resources and mining industry all of my working career, which now spans 50 years or thereabouts. So I really don't know anything very much else other than that. And so I effectively joined the Rio Tinto group pretty much straight from university, Andrew, going back a very long time ago. And why was that? Well, I did a sort of an economics degree and a few other things much at the same time. In those days, people were looking for more and more graduates. So, we didn't have to apply for many jobs. They were all coming out to the campus to interview you type of thing. So I liked the idea of mining and resources. It was international, it was remote, it was big capital spend and so on and so forth, and a little bit of boys and toys and trucks, I suppose, Andrew, associated with all that. So got involved, and really I was very lucky to join the mighty Rio Tinto group early on. You go through a graduate training program and various other departments and businesses and so on. In fact, I don't think there was a commodity or a company or a country actually that whilst I was with Rio Tinto that I didn't visit. So, yeah, that's how basically I got started. I really enjoyed it. It's been a great growth experience there at Rio. I had 20-something years there. So that's how I sort of got started, and in a way, sort of never looked back, I suppose, Andrew. I always enjoyed it, always very busy, and always very exciting. Good growth, in the industry, Andrew.
Owen, talk just briefly about what was it for you that you said, look, I'm going to strike out on my own here. I'm going to go do something else. When did that bell go off in your head and said, you know what, I'm gonna strike out on my own. It's been great learning from one of the biggest mining firms in the world, but I'm gonna move on and do some stuff for myself.
Yes, well, again, interesting question. I was there with the Rio Tinto Group for 20-something years, so it took me 20 to 25 years to learn that all of those things and strike out on my own. But I guess, Andrew, what was happening was that I was spending a lot of time in Asia. I was watching the growth of the Asian countries and China starting to grow. So got Indonesia and the rest of Southeast Asia, Northeast Asia, and then with China starting to grow. So sort of watching that, part of it in a way. We were supplying materials into it. There were business development opportunities up there, and Rio was looking at sort of getting into a little bit of downstream integration every now and again to help commodity sales of their products. But that gave me the inspiration that I thought that there was an opportunity here, particularly in copper, particularly in gold, particularly in base and precious metals in Asia, for a smaller guy to start his own business and grow it. And so you had a very good platform in the sense of the Australian Stock Exchange. You had a number of companies who were doing not dissimilar things, particularly in the gold and copper space. And I thought that I had enough connectivity and relationships and networks and so on in Australia and in Asia to actually commence business. And we got involved in an acquisition, an early acquisition of a business that went exceptionally well. It got taken off our hands in about 18 months or so, but then we actually used that money there to put into what we call the Mighty Ox. So that's how we started that particular public platform. Oxiana it was called, and we grew Oxiana, Andrew, from a few $1 million to a few $1 billion. One of those overnight success stories that took about 12 or 15 years or thereabouts. So that I suppose was the breakthrough. I really enjoyed my time there at Rio Tinto, but thought there were some really good growth opportunities to jump out of the big end of town to jump to the smaller end of town. I mean, it's a bit of a leap, type of thing from a personal perspective and a corporate perspective and family perspective, all those sorts of things. But took the leap, and so far so good. It worked very well, particularly with the Oxiana growing that business, Andrew. So that was sort of, I suppose, the turning point, if you like, the tipping point.
Great. And that brings me to where you think you got your big break, and maybe that is where it is. I think for a lot of us that at some point that we realized that, look, we had a really good deal here that really kind of got us our first big break. And that guided you from there to wanting more of the same or something similar. Would you say it was Oxiana? What was the big break for Owen?
Well, certainly Oxiana and growing the business, and probably the biggest break in Oxiana. As I say, just prior to Oxiana, as I say, we had a very good break in terms of a management buyout, and we used the capital from that to begin Oxiana. But Oxiana got a seriously good break when we bought a development project from Rio Tinto. It was very high grade copper. It had gold surrounding it. It was probably a bit small for Rio Tinto, but just down the fairway really for Oxiana, which was growing and looking for those things up in Laos, the Lao People's Democratic Republic, and we built that business, very, very, very substantially. So that was another break. I think that in terms of those tipping points, as you say, as you go through your career, what it's like and are still living it. There are various points at which, you've got to come to terms, I suppose, have a sort of a long, hard look at what you might have done and what you might be doing, where you might be going, what you're good at, what you're bad at, where you've tried, where you've failed, where you've come up short, all of those sorts of things. So you've got to be continually looking at that. And you've got to be continually looking at that, Andrew, particularly when you're outside the big mothership. If you're no longer attached to the mothership of Rio and so on, you tend to be doing all those sort of things yourself, and they come at you every day.
Absolutely. And, the connections that you had spending the 20 years with Rio has got to be an important factor in maintaining those relationships over the years. Let's come back to a personal item. Where do you like to spend your time, Owen? And give us places you like to spend your time over the year, your plans for 2022, where you plan to spend some time. And then also maybe if you could throw in your favorite leisure activity or two.
Okay, now look, very interesting, and I won't take too long. Andrew, the thing is, I mean, I love my work here with EMR Capital, all the things that we're doing. We're building businesses, we're looking at divestments and so on. So we're looking at all those sort of things all the time. And I love it to death, because I've been involved at the beginning of it, around about 10 years ago. We were working together with people that I've worked together with for a long period of time and love that, and there's always challenges in the whole thing, nothing's simple, nothing's easy in our business. It's a volatile industry that we've chosen here. So things go up and down. So there's always a place. So just love doing that. That's for sure. In terms of places to go, I mean, Julie and I and the family spent a lot of time in Asia. We lived in Hong Kong. lived in Taiwan, spent a lot of time traveling up in China, Indonesia, other parts of Asia. So I love going back there, got a lot of friends and relationships up in that part of the world. Really, really enjoy that, and the whole family does that too. And from time to time, get a bit of a break here in Australia and play a bit of bad golf, Andrew. Very, very, very bad golf, but still enjoy it. And my golfing buddies at the club are very happy for me to come down. I might as well just leave my wallet on the bar for them to enjoy, because they enjoy taking some money off me, Andrew.
We'll have to catch up and do some golf. I'm a bit of a hack myself. The snowmans are pretty frequent, so snowman referring to the big 8 on just about every hole, par 4s and par 5s definitely. Sometimes the par 3s. And a good drink and good company makes it fun, even if you never get to the golf course. Par for the 18 holes. Let's chat energy sustainability for a moment. Climate, trends like net zero carbon goals. What are your comments? What comes to your mind when I say the word energy sustainability, climate challenges, and net zero?
Yeah, okay. Well, look, it's been coming at us for some time. The way we think about it and look at it is, energy transition, as you say, decarbonisation, responses to climate change, and so on. It's no longer a thematic. It's actually a dynamic, and you now have countries and companies and corporates and so on all committing one way or another to net zero. Whether it's 2030, 2050. 2060 in the case of China, and Modi's taken us out to 2070. So he's given us 50 years, right, of all of that. So that's one thing. And just when you thought, I mean, Andrew, the background here has been, of course, of being in commodities. We've always thought that we're in for multiple decades of long-term growth anyway, one way or the other, because the world continues to grow. Yes, you have your humps and bumps from time to time, and we had one with the Asian financial crisis. We had a very serious one there with the GFC, and you had a shorter term bump there with the COVID downturn type of thing. So they're always there. As I say, you've got volatile prices and so on, because demand moves quickly and supply moves slowly and so on. But the trajectory, the force, the direction of commodity demand was, to us, perfectly clear. It was all going in a northeasterly direction. So you've got good growth there. Everybody, all countries around the world looking to get on that, as I say, super highway of economic growth and prosperity. That's what they want to do, keep doing that. And now we've got the energy transition. So, there's another layer effectively, certainly for mining metals and commodities, another layer of demand, because you're sort of shifting away from hydrocarbons, you're shifting towards batteries and energy metals and critical minerals and metals and all these sort of things. So you've got another uplift, you've got another boost there going forward. So from a demand perspective, we're going to see that stronger for longer, as they say. It's supply is where the issue is, and we are supply people, so we're part of the problem here in terms of how do you match all of that supply and at the same time comply with what the regulator is talking to you about scope 1 emissions and scope 2 emissions and scope 3 emissions and so on and so forth. So and the industry has actually responded very, very well, Andrew, to all of those sort of things. So it's not as if it's been asleep and waiting for the regulator to say, well, now you're going to have to do this and you're going to have to do that. We've responded, the industry responded very, very well, in the same way, Andrew, that we responded very well to the COVID crisis. I mean, the mining industry is very well set up in terms of occupational health and safety, emergency procedures, all of those sorts of rules and regs, remote sites and so on. So when it was social distancing, when it was testing, when it was this, when it was that, was masking up and all this sort of stuff, well, we were onto that straight away, and the mining industry continued to produce. There are a few disruptions and conniptions and various other things around the world, but generally speaking, the mining industry in Australia and Canada, responded, and North America generally responded pretty well. South America took a couple of hits, Africa took a couple of hits, but generally speaking, Australia, North America responded very well. So And in the same way, we as an industry are responding to the energy transition, bearing in mind, Andrew, that it is a transition. It's a journey, and Modi's taking us out now to 2070. So it's not a marathon, and it's not a sprint. It's not a cliff, and so on. There's lots of things happening. There's technologies yet that are not invented that we do need to get to net zero by certain times, and so on and so forth. But the good news, Andrew, is that there's so much work going into it, and there's so much resources going into it, and the world is well and truly capable, whether it's the mining industry or the steel industry, the industries that come next, the scope 3 type industries. There's a lot of work, and they have such a massive industrial capability, a massive research and development capability these days compared to, well, whether it was 20 years ago or 50 years ago. That capability is just enormous. So you would have to be very confident that the world is going to respond. We were asked a question recently about, well, what about China? Can it really do, 2060 net zero? Well, when you look at what China's accomplished in the past 40 years, Andrew, it's just amazing, and of course it can do that in the next 40, got 40 years to do that. What has accomplished in the past? Of course it can do that. Not only will it do that, it will be a leader in all of those things. And in fact, it's already a leader, whether it's in the solar technology, the wind technology, all of those things. It's going to continue to sort of show the way. So we shouldn't. Yes, there's going to be supply disruptions and supply chain disruptions, and there's resource security. Andrew, is going to be a big issue for countries and people and so on. You'll see plenty of that. But look, again, I think it's true to say that the direction, the force, the trajectory is all perfectly clear. We're going to get there. This is where the world is going now, and we're part of it. We're inextricably intertwined with all of that. So that's another challenge, and that's one of the reasons, Andrew, that I just sort of love my work, if you know what I mean, because we're into that sort of stuff. We're not arguing the toss about climate this and that and degrees of this and degrees of that. We're not arguing that case. That case is gone. We're past that now. This is the way the world is heading. So, yep, very interesting, Andrew. I hope I stayed on the subject there for you.
No, you brought up a lot of good points, a lot of discussion. I think Modi's probably got the best timeline that probably works the best here.
Yes.
We've seen a lot of Western, legacy nations, Owen, if you will, that, later stage nations constantly push out their goals and will push out their goals as they start to realize that the ambition that was stated probably doesn't get met. But along the alignment of a Modi type thought process, 60, 70, you mentioned things like compliance. And when I hear the words compliance and regulatory and cost pressures and pressures from ESG, which we'll get into, jurisdictional pressures, et cetera, one thing comes to mind: price escalation. That's certainly something that we're going to see a lot of in our business, everything that is here in the natural resource business. You have a lot of tailwinds coming, and I think it will continue, and I think we'll see that in the market as we move forward here. Let me come back and ask you a question a little bit on energy for a moment. Let's say you guys had the biggest copper mine in the world. Let's make it a posit that is unmined at this point. If EMR was to build this out and the government said you can't tap the national grid, you have to come up with your own power and your own sustainability for your project, super large scale project, what form of energy would you use to power your mine and to power electronic fleet and all your equipment?
Okay, so question, very interesting question, of course, right? So, it depends on location and nearby resources and so on and so forth. But if there is no infrastructure, then, as you say, you're using your own energy. One of the things that we in the industry have been doing is actually becoming much more energy efficient, and whether that's the usage of battery storage, wind power, solar hybrids, and so on. So we've actually been doing that for some time, and particularly when you're here in Australia, Queensland, Western Australia, for example, you're able to do that because you've got plenty of solar and there's plenty of wind type of thing. There's less hydro hydro sort of running around the place. So you've got all of those things, and they will now be developing super fast, Andrew, in terms of those technologies. So and the work that's going on in America and in China, in terms of big storage batteries and so on and so forth, it's just huge, just tremendous. So I've got no doubt that that's where the future lies in terms of energy storage there, on-site use, and all of your mobile fleet will certainly be battery powered, and you will also have lots and lots of automation and robotics, and you're seeing that happening now. You're seeing it happening, and certainly in the open pits, you've got automatic trucks and drills and shovels and so on and so forth. But you'll see it happening more and more underground as well, and that's where some of the higher cost mines are. We've got a number of underground mines. They tend to be a little bit on the higher cost side because the more people per unit type of thing. But with automation, with robotics, with artificial intelligence, you can take that out, right? We could run it. You could run it from your headquarters somewhere. So a bit of a ramble on there, but the technology has been developing for all of that, Andrew, in terms of actually minimizing the energy input relative to the output, and being able to store on site and use solar and wind, because we've been driven to do that, because you have had, this isn't the first time that we've got high oil prices, right? You will remember it has been 110 before. So you'll always be driven to become more efficient with those sorts of energy prices running around. And of course, availability is another thing. So the industry has actually been adjusting. So that's how we would adjust. It would be highly automated, and it would have a lot of that technology associated with it. I think one individual mine site probably is still a little bit on the small side for a smaller scale, a nuclear powered type of reactor. I don't know that they're down to that sort of scale yet, Andrew, but that is going to be the future, certainly in terms of the nuclear industry and the uranium industry. Going to be smaller scale. Terrific amount of work going into it, and you don't come up with immediate solutions overnight with these things. But that's the way the world is heading, whether that be for whole countries, let alone whole provinces and industries. So not obfuscating there, Andrew. Does that give you some sort of answer, more or less, to that one?
Certainly it does, and I appreciate the thought process on that. I should have clarified my scenario and said it's barely sunny and there's no wind. But I think you gave the good answer there. It's interesting because that folks like the Russians lead in some of this innovation, whether it's their icebreaker fleet, whether it's
Yes.
their small modular reactor mobile vessels that just pull up just offshore there and unroll the cord and hook up. And definitely that scale is there. Maybe not in the Western world, but certainly the Russians are demonstrating that. And as you know, they've kind of excelled with their export program and at home as well. But the future is bright, I think, on those items, and we certainly see a lot of pushes to go towards smaller scale. Fusion is on the books. Not sure if it'll happen anytime meaningful for you and I think we'll get there with regards to fusion. On the resource markets, I want to talk a few areas here with you and just get your thoughts, because you're opinionated, you're a wise man. Let's start just to kick it off here, and we'll get to some sweeter stuff in a moment, Owen, but let's kick it off here with your thoughts on the future of, and also near term, coal and oil.
Yeah, okay. Well, look, again, we prefaced a little while ago the energy transition, and it is a transition. It is incrementalism, going out for a long period of time. So you're still going to need, lots of oil for a lot longer, because the world's still growing. I mean, it's not as if suddenly you're setting everything for 20 years or 50 or whatever that was. Everything stops while you transit out of oil and you transit into other stuff. That's not going to happen, because you've got the world growing. Everybody wants to continue to grow. You've got population growing, expectations growing. I mean, the whole information technology and communications revolution has taught the world that they'd all like to do better than they're doing at the moment, and what their parents and grandparents did. So they want some of that, increased prosperity. That's why they want to grow, and that's going to continue whether you've got energy transition or not. Okay, so you're not just stopping everything and transiting out and it's all over in 2050. It's a bit like, for example, just thinking coal for a second, metallurgical coal. Metallurgical coal a bit different. It's used in the steel industry. It's only about 10 or 15% of the world's total coal consumption in steel, but it does have it's an emitter, if you like, and therefore transitioning out over a long period of time. But you do need lots more of it. You actually need it to increase in the short term. It's part of the solution, because you won't produce all the steel that's required here for all of the infrastructure, for all of the transition. You won't produce any of that without metallurgical coal. It doesn't matter whether it's going to be more scrap and a DRI and hydrogen and so yes, you're going to have all that, and there's going to be various other things and so on. But you're still going to need a long, strong diet of high quality metallurgical coal. So from that perspective, there's a very good future for met coal as far as we can actually see, Andrew, because of that transition, because of the importance of steel to the world. In terms of thermal coal, a little bit of a different story. I mean, you do have alternatives. Now, they're pretty high priced, high cost type alternatives, but the cost of those alternatives are coming down. Wind and solar, they're coming down on a daily basis. The technology, the work that's going into it is very good. Doesn't mean there's not work going into, by the way, making coal-fired power stations more efficient and less emitting and all of those sort of things, and carbon capture and storage. There's plenty of work and research going on in all of that too. So that'll slow transition down somewhat as well. So look, I'm still positive about these things. It's not as if they suddenly just fall off a cliff and that's the end of it. It's all over. Look at the price of oil today. It's 80 something dollars. It's not showing any signs of weakness there. So and look at thermal coal and metallurgical coal the same. Look at those prices. They're way up there. You're talking about inflation and so on. No wonder you got steel prices at all times high. You got all of these other prices at sort of all times high. Of course, you're going to have some inflation. It's a bit hard not to when all of your sort of major inputs are actually at those sort of prices. So it's going to be around for a while. Not that we're not arguing that inflation is a great thing to have. It's not. We don't need it, but you're going to have it from time to time. So I think that's a sort of a partial answer there, Andrew.
I think sometimes places like Africa, like parts of Asia, certainly Central and South America, still appreciate oil and need oil to get to that next level as a developing nation that legacy nations have appreciated for much of the past 50, 60, 70, 80 years. There is a desire and there's conflicting interests, which is good. Diversity in this world is good. Oh, and I mean, imagine global lockdown. It is good that we have those different stage nations, and you know this really well because of your jurisdictional experiences, various stages of all these different nations on this earth. In the meantime, I think you're absolutely right. I think this stuff continues to be needed, and because of the pressures on it, and because of things like inflation, things like irresponsible printing presses, it's only going to likely go up, and assets like this typically continue to go up. They might have some breaks, but they continue to go up. How about a little sweeter metals, the EMR specialty? How about copper and gold?
Well, look, I mean, I think copper is a winner and will continue to be a winner. It's a big, industry, 25 to 30 million tons a year, and continuing to grow. It's sort of outperformed everything over the past 20 or 30 years, with the exception of gold, maybe. So, no, copper in very good shape. It's powering the whole information technology, communications revolution. It's electrifying China, the rest of the developing world. Noblest of all metals. There's no substitutes, and they're still finding more and more uses. Microbial copper and so on. So it's a great thing to be in. And now with the whole energy transition, Andrew, you've got another layer of growth. So copper in very good shape. Again, we're the problem, the supply side people. It's all very well to be long, but you need to be longer. You need we need more copper. The world needs more of it, type of thing. So we're very happy to be in the copper business and like to be in more of it. I think you're probably going to have to, you mentioned jurisdictions. I mean, I think you're probably going to have to go to more sort of faraway places or places that have been less popular over the past, 40, 50 and longer years. So we're going to have to sort of get on that train a bit too. And jurisdictions, of course, will come and go somewhat in terms of their sort of in favour, out of favour, flavour of the month, and all that type of thing. But I think the direction is actually quite clear. Generally speaking, jurisdictionally, countries want to develop and grow, and one way to do it, of course, and be involved in it, which has got a very good model that works. We're in Europe, it's worked in North America, it's worked in Australia, is that mining and resources industry. It's an engine, right, for growth, and so on. That will be a dynamic in some of these other, as I say, less popular places, I suppose, and will become more attractive. You mentioned parts of Africa, parts of Asia will certainly become more and more interesting and more popular, and we're just on copper. Okay, so copper, all good, and there isn't an hour goes by that you don't get another sort of broker report, talking up copper and the various companies that they actually follow. On the gold side, again, gold is an amazing metal, really. I mean, it's what I would call the perfect metal. It's a commodity, it's a currency, it's a store of value, it's a hedge against inflation, it's a hedge against geopolitical uncertainty, it's a hedge against financial uncertainty. And they're looking for substitutes for it all the time, cryptocurrency and of course silver comes and goes a bit, and platinum and various other things all come and go. But gold is still there. It's physical, it's in demand, it's got a terrific consumer use, in terms of jewelry. And a lot of that jewelry, you will have noticed, Andrew, certainly like me, doesn't come back, right? It tends to, it goes out there into the market, and people say, "Oh, yes, but all the gold that's ever been produced is still above the surface." Well, that's right, but try getting some of that back. It's very difficult type of thing. So it's got and it's so hard to find, Andrew. It's so hard to find gold. Half of the world's exploration dollars go into gold. Can you believe that? They go into gold exploration. Yet, from a resources and industry perspective, from a sector perspective, it only takes up, 15% or something or other of the, world's sort of commodities and so on. Yet it takes 50% of exploration. So that's a good thing about gold, is actually very hard to find. So, and look, it's it's a hedge against all those things. And Andrew, peace, happiness, kindness, and so on hasn't broken out yet around the world. You will have noticed that, So you're going to have those continuing tensions, and that's always people will always have a flight to gold under those sorts of circumstances. So that's why we like copper and gold.
Good points. You mentioned things like jewelry not going away. You included yourself in that, and I would just propose that we create a Owen Hegarty non-fungible token or something like that. That way that you continue to move on no matter what. So, so on, copper really clear goes with things like uranium. Copper goes with things like power grids, power plants, electric vehicles, everything in your house now. No doubt that it's a big deal as we continue here. Come back to gold for a moment, and then I want to move on. Gold in the form of wealth, money, preservation, hedge against printing presses. What's the Owen opinion on gold? And do you believe and do you hold gold yourself in terms of having this as part of an insurance policy and all the other things I mentioned?
For all the things that we've just been talking about, for all those reasons, you really want to be as long and strong as you possibly can in quality unhedged gold. Right? That's our view. Now, we're talking our book a bit here, of course, because we are very long. Personally, I've got so much sort of stock, if you like, in the business in the company that I have very long gold, right? So you'd have to say I got a lot of gold, but I don't sort of store it in the house or in the vault or anywhere type of thing, because we've got a lot of it in the group, so as to speak. And as I was saying, all of the reasons for buying it, the increasing population, there's no substitute, right, for gold, in the same way there's very few substitutes for copper. So the uses just keep multiplying, and you can't manufacture it out of carbon or something or other. You've actually got to mine it. You've got to mine it and process it. So look, I like the idea of the sovereigns, and people will continue to do that. So yeah, then that's another storage, because people get a bit disillusioned. Delusion is another thing, Andrew, but they get a bit disillusioned from time to time with the cryptos and various other things that effectively are a substitute, right, in a way for gold, but they're not a substitute, because they just don't have that same presence, that same basis, that same history, that same physical presence of gold.
Agreed. In my view, there's nothing to stop other forms of that type of technology to come along. So it's kind of the flavor of the day. Michael
Mm,
Saylor would disagree. But
mm,
look, at the same time, congratulations to the folks who got it early, have been able to ride the show. Not
Yep.
opposed to that. Speculation's okay, but you
Mm,
got to see it for what it is. Very good points on the gold front here. Just to wrap up before
mm,
we move on to some other things, Owen, how about uranium? You've had
mm,
some run-ins with uranium, but just give us your
mm.
brief thoughts on that market.
Yes, we've been associated with Next Gen Uranium, Toro Uranium here in Australia, been associated with those companies, with the flotation of them and the development of them, and ultimately success of them, I suppose. Look, we've always liked it, and again, go back to my days at Rio Tinto. I worked on a number of uranium projects for them, Rossing, Mary Kathleen, and so on. So some familiarity there with that market and the product and the commodity. So look, and again, very supportive. I mean, it's come and gone a little bit in terms of popularity around the place, particularly with those with the accidents in Russia and Japan and so on. But I think when you look out over the next 50 years, if we've got plans to do all the net zero and so on and so forth, you're going to see continued proliferation of nuclear plants, and they're going to require, of course, a diet of uranium. We're happy to be long uranium. It's not a so favorite is not the right word, but it's not a commodity for EMR Capital, because as a private equity fund, we're sort of a little bit on the closed end side. So you've got a limited amount of time to do your work, whereas uranium, you do tend to need longer. There's sort of a longer gestation period, if you like. You need a little bit longer time in a way to make the discovery, and then get the development, get permitted, then get the offtake arrangements, and so on and so forth. And because the sort of safety and security, and also up there in North America, you've got to freeze the ground, you've got to do this, you've got to do that. We're always claiming that we're over-regulated anyway, but uranium in particular got a fair bit of regulation going on. So that's why, in a way, not for EMR, but definitely as a commodity, it's in favour, and we've put money into it. No question about that. We put money into it in Rio Tinto. We put money into it in Oxiana, in a way, when we listed out Toro, and we've put money into it privately here with Next Gen Energy, ISO there with Craig Parry, and so on. So definitely a supporter of everything that the smaller guys are doing, and the bigger guys. So we're a fan of that commodity, Andrew.
It's a tough sector, Owen. You definitely know that, and I've certainly realized that over the last 5 years or so of spending a lot of time and effort on the sector. I mean, certainly it's paid off, but definitely it's a very difficult sector. Before we move on, you have to pick one, which I think I know what it is, but your favorite metal over the next 2 to 3 years. Pick one metal.
Well, it's copper. for all the reasons that we've just talked about, diversity of uses, no substitutes, growing number of uses, energy transition, all good. And there's not a day goes by that you don't get another report on it. And we're long through our listed company here in Australia, listed on the ASX, 29 Metals. That was a recent float, Andrew, in 2021. I mean, 2021 was a pretty tough year for lots of things, but one thing that we did do here was list off and load off an IPO 29 Metals. We got it done. That was the most important thing. IPOs are never simple, never easy. They've got a bit of a long run up, if you like, to be able to get them there. It was very successful. We got the funding. We took a little money. We were able to pay back our investors some money, and we were able to support 29 Metals with money. It's got some really good operations and a terrific growth profile going forward, and it's trading up. So that's always it's trading well above its IPO price, Andrew. So even better, And we still own we EMR still own 45% and keep it forever. That's certainly our intention because of the terrific growth prospects that Peter Albert and the rest of the team have there at 29M. So the answer, Andrew, is copper.
Owen, that's great. And I'm going to cheat here and say that gold falls in really strong there, copper, and I would also throw in uranium into that mix. Tremendous outlook, and it really complements the other factors that are involved here. And good point on 29 Metals. I encourage the audience to look at that. And I want to get to the business model in a sec to talk a little bit more about what you guys do with these vehicles. But before we do that, I want to talk jurisdictions for a moment. EMR, yourself, you guys have an appetite for, I would classify, tougher jurisdictions. There's a few others out there who do more difficult jurisdictions. There's also some people that are fairly well known that also come out and talk about this potential migration of away from frontier nations back into some of these, what they would consider more stable jurisdictions. I don't know if that's the best word to classify a legacy nation, but more stable jurisdictions, like North America, places like, Australia, Canada, United States. Tom Kaplan, Nova Gold, has mentioned, this thought process in terms of a migration back to stable jurisdictions. But people like Robert Friedland would disagree. And I'd like to get your opinion on what you think are good jurisdictions moving forward and maybe places you like now.
Yes, okay. Well, look, a couple of things there. I don't disagree with people looking back into the existing sort of legacy nations, and they do that anyway, simply because they are a little bit favourite, and in many ways they'll be invested there. For example, with our assets here in Australia at 29 Metals, for example, the best place to find the next ore body is in the shadow of the head frame, as they say. It's right next door, so it's the ground. So you've got the infrastructure, you've got the people, you've got the operation. So that's where you should be looking. So that's one thing. The second thing about that, of course, is that a lot of the newer, because you've got a higher, longer term copper price and other commodity prices, the marginal cost, the long term marginal cost will be higher. Therefore, you can actually spend more money, I suppose, looking at things. And a lot of the ore bodies are going to be undercover, so they're going to be harder to find. But the technology is such these days that you can do the deep search and so on. So that's another, technologically, I suppose, it's another reason for perhaps coming back there. But it doesn't mean you won't continue to see money flowing into those what have been sort of less popular or what have been a bit sort of less stable, I suppose, is a way to put it. And, with changes of rules and regulations. I mean, we're long-term planners, thinkers, and investors, right? So you've got enough moving parts in the whole thing. So you want to sort of minimize that, right? So if you've got therefore the jurisdiction that you go to, you want to be able to, be confident that the rules and regs and so on are going to be the same. I mean, that's a very important factor, right? That from time to time, it doesn't matter. I mean, you might be here in Queensland or Arizona or somewhere. The rules are going to change from time to time, but are they going to knock you out completely, right? Well, no. That's you're much more confident about not being knocked out in those more popular jurisdictions. So when you go to a new, as you say, new frontier, you have to have that confidence. I mean, it's one thing to have the confidence about the geology. You've got to have confidence about the infrastructure, the people, capability, being able to get your people in, being able to get your gear in, being able to get your product out, all of those sorts of things. You've got to be confident about that. But you've also got to be confident you're going to get a good deal one way or the other. And that just not getting your license from the central government and getting your sub license from the provincial government, but you've also got to get your social license, which is on the ground. You've got to be very confident that you're going to be able to build relationships with the local people so that you are a long-term sustainable business and continue to be supported by all of those folks, well, not only the folks on the ground, but the folks in the province and so on. So you've got to have that confidence. So you've got to do, Andrew, you've got to do your due diligence very well if you're going into those new frontiers, because they don't have they may not have a track record in mining, right? They may not have a track record in some of the more, established governance areas, so that's a bit of a moving part in itself. So what you have to do is, in a way, it's a partnership that you need to work with them to be able to develop, in some cases, what the rules are. So that requires extra effort. It requires on-ground presence of your senior people, pretty well all of the time to build up that relationship. And of course, once you establish those relationships and you build up trust and confidence, you've got friends forever. So that then becomes competitive advantage. That's another attraction, Andrew. Competitive advantage because you've done the work. You've established your business, your people, your sort of karma, your culture. You've established that in the valley, in the country, in the province, and that will always give you, we feel, a competitive advantage. So getting off subject there, but I think the point is, well, there might be a bit of a return to some of the more popular areas of the past. That's okay. You've got to do that because you've got to go and find the ore bodies. I mean, we're supply side people. We need more supply, but there will also be work in the frontier countries, as I say, less what countries that have been less popular and perhaps less stable in the past. And as you say, you mentioned Robert Friedland. I mean, what an absolute magician Robert is. He's done an amazing job there in the Congo and built a multi-billion-dollar business with a crackerjack copper asset, against all odds, against all opinion, against all, oh, never do this, never do that, it's the Congo, blah blah blah. Well, he's demonstrated that it is eminently possible to build the business, build the mine, and attract other investors. He's got the big Chinese groups there, and so well and truly embedded, into that jurisdiction and leading the way, right? Leading the way not only in Africa, but leading the way for other. Very good example of how to do things in other places, Andrew. So we can take confidence from that that it can be done because it's been done there with Robert. So he's a great leader.
Well said. I think you have to be flexible and you got to mix some of these jurisdictions together to get the proper punch, if you will. And certainly, yeah, Ivanhoe's done a great job. It's been a long follow of ours, probably a patient one, but the market is continuing to warm up and warm up and warm up, and you're seeing that in the 6-7 year chart. We'll see how things proceed there, and I certainly agree with your views on it. I don't think it's a one or the other. I think that you have to have a blended approach, and look, there are opportunities in some of these legacy jurisdictions, and there's some nice deposits that we can think of that are undeveloped that have challenges at the regulatory front. But you did touch on a topic that I wanted to touch on briefly here because you've already mentioned it a few times in the conversation. But give us the Owen view of ESG, and to you, given what EMR has been doing and what you've been doing for the last 50 years, is ESG anything new to you, or is it just another acronym for CSR?
Well, it tends to be a little bit the latter. Look, ESG is certainly nothing new from our perspective. It's certainly developed into that particular acronym. I mean, environmental, social, and governance, and they're all separate, but they're all a bit commingled and intermingled. Right? Environmental management is something that has been managed by mining companies, because at the end of the day, you're making an incursion in a way into the ground, into water courses, into the terrain, and so on. So therefore, you need to manage the environment and ultimately rehabilitate and restore and so on. And we've been getting, much better at that over a long period of time. And particularly if you're going into areas where you've got heavy populations, you've got high rainfall, and so on and so forth. So you need to do your environmental management work very well, and that's where it gets commingled, of course, with the social management as well. So environmental management mainly on the technical side, but it does, of course, gets involved with the social side. And there's nothing, I mean, in a way, to me, and I keep saying this regularly, Andrew, to me, nothing more important than getting your social work done. I mean, you're not worth showing up if you can't do that. If you can't actually win the trust and the confidence of the people who are there or been there, who will come there. If you can't do that, then you don't have a sustainable social life. So you must do that work well. So that's I suppose, the S side of it. And it doesn't matter whether you're in the jungles of Laos, for example, or the rainforests of North Sumatra, the Atacama Desert, the red dust of the Mount Isa inlier. It doesn't matter where you are, in the world. There are always going to be lots of people around, and there's going to be lots of heritage and so on. So you have to do your work so well. So that's very important, and recognized early. In a way, I was probably a bit lucky growing up in that whole Rio Tinto area, where that became more and more important as the years have gone by. And so therefore we adopt that. That's first principle, if you like, of new developments, is making sure you get that right. So they're very conscious on the social side, very conscious on the environmental side, and we will claim, we'll claim leadership there, if you like. We'll claim competitive advantage. We say we do it as well as anybody, and it is terribly important. And our investors, really, it's really important for them, right, to see that, because it's becoming, yes, ESG in itself is becoming more popular, certainly as a term, but in substance as well. You've got to be able to do that work well, and it's more than just a box ticking. It is actually demonstrating time after time that each project that you're involved with, each business and each company has all of the right sort of criteria, principles and policies and procedures and so on. The governance side of it, governance, for example, the platforms, you've got the Australian Stock Exchange, you've got the Canadian Toronto Stock Exchange, all of the Western exchanges, and now you've got the other exchanges, particularly in Asia, and they all have a very similar suite of rules, regulations, standards, principles, policies, procedures for you as a corporate to comply with, and all the way from not only reporting and getting your sums right financially, but reporting in terms of the JORC code and NI 43-101 and all the various standards, all of those things, but also increasingly you're seeing sort of diversity and equity and inclusion and gender, and all of these things are coming in, becoming more popular, but also becoming an important part of your whole governance regime. So particularly in a public company, but private the same. I mean, we're private equity. We've got most of the companies are private companies, but we all have the same standards. We're always going for best international practice. I mean, that's what you have to do. You have to follow best international practice. It doesn't matter if you're a public company, a private company. You can't hide anything these days. You're effectively, open. It's open book, open slather. So therefore, you have to aspire to best international practice. And at the end of the day, we're business people, right? We're not the regulator. So of course we'll follow the money, we'll follow the trend, we'll follow the market, we'll follow the regulator, because you won't go anywhere if you don't do that. And we'll follow best international practice, because otherwise you'll become less competitive over a period of time. So to remain competitive, you must follow those standards. So again, a bit of a rabbit on there, Andrew, but I hope that sort of covered off a little bit on the ESG side.
No, great overview, Owen. And you need a good team
Mm.
to be able to carry out a lot of this stuff and do it to your standard, which continues to be important. And it's tough to find good people. That's also a factor as well. Let's get to the business model and let me take a
Mm.
crack at it here, and then you can do a
Mm.
better job at it to explain better than I can. But you guys are acquiring assets via acquisitions, private or public, at a good price with upside, a good amount of upside left, develop and produce, eventually list the company, continue the upside, and then essentially rinse and repeat. Is that the model?
Yes, it is. That is the model. I mean, our model tends to be, operational. We're operational people. We've got a very good track record. Been working together. You mentioned people are always difficult to get good people, but that's why I'm very happy and very lucky in a way to be working with people that I've worked with for 20 years. And it's terrific. They haven't thrown me out yet. So as I say, I'm very happy to continue to work with them there. So, good relationship people. We'll focus on a few commodities only, so we don't want to be everything, all things to all folks, etc. And as I say, good track record, particularly when it comes to the Asian part of the world where all the growth has been, and a lot of the acquisitions are going to continue to be made in the Asian part of the world. So we've got good relationships there. So it's operational. We like to be in control, not because we're control freaks pathologically per se, simply because we've gone to a lot of trouble actually to put together, good teams, good people, and so on. So you want to be able to use that technological, operating background and capability. So to maximize the use of that, you've got to have a control position or joint control or ultimately get to a control position. And what you want to be able to do is buy an existing operation or something that's about to start producing. We don't want to be early stage exploration per se. Late stage exploration, I suppose, in the sense of an existing ore body discovery that could be quick to production. You've got to limit the timeline a bit. The PE model is such that, as I was saying a bit earlier, it's a certain time frame. So therefore, you've got to get in, do your work, and be able to have confidence that you're going to be able to get out. So it's a buy and improve type of model, and then ultimately exit. And the exit can be, transit out in like a 29 metals, an IPO, or you can hold it for a long period of time. I mean, there's plenty of private equity groups who've held assets for 20 years, even though it was a 10-year fund, simply because they're very good assets. And why would their LPs, why would their shareholders sort of give them the cuts if they've got something that continues to sort of perform in terms of cash flow for their constituents. So you do have that type of flexibility. So that's our model. I was going to say, and we're very rigorous and very disciplined about it. Again, a little bit of advertising, I suppose, for EMR Capital, but we've got a good model. We've got a good suite of principles, policies, procedures, and very rigorous and disciplined about the way in which we go about our work, and very proud of all that. And generally speaking, being successful. So I mean, it doesn't mean you're not going to have sort of humps and bumps and conniptions and regrets, from time to time. That's a part of life. It isn't perfect. I don't know whether you've noticed that over the years, Andrew. It's not completely perfect. So therefore, you're going to have those. But again, part of your experience and background is actually dealing with that stuff. Talking about experience, one of the quotes that I do like, digressing just quickly, one of the quotes that I do like, experience is what enables you to recognize a mistake when you make it for the second time. so
True.
so the more you've made, you learn so much more from your mistakes, I suppose, than your successes. So anyway, that's again getting off the track there. But look, that's our model, and so far, touch wood, so good. It works very well. We've got a lot of, as I say, good people, good projects, and good supporters, and we're going to keep doing it. It works, so it's not broken, so we don't have to fix it quickly.
Very well. And I suspect there's a good amount of good folks on the team there, Owen. You said 29 metals, that's one of them. But are there any other companies in the EMR portfolio that you just want to mention and maybe what the focus is? Just take 30 seconds on each, just maybe mention a couple other ones just so the audience can go do some of their own research on this. But, talk a little bit more about the umbrella and the portfolio companies.
Yes, okay. Well, again, as I said, we're copper gold. 29M is in the copper side. We have a company here in Australia called Ravenswood Gold. That's a private company that we own with our Indonesian partners, 50-50. We may bring that to market at some point in time. That's in Australia. That's going to be Queensland's largest gold mine, actually, when we finish with the development of it by the end of this year. We're also in Queensland in the Kestrel Metallurgical Coal Mine with our friends at, again, out of Indonesia, Adaro, as well as Mitsui. So that's Kestrel, and again, that's private. In the UK, we have the West Cumbria metallurgical coal deposit, and that's a terrific project right in the middle of infrastructure and people and so on and so forth, and it's going through its final permitting hoops to get permitted there. That's West Cumbria. We have two potash projects. One is a public company, Andrew. It's called Highfield Resources, HFR, listed on the Australian Stock Exchange, and that's a potash project in Spain, in northern Spain, just outside Pamplona. Again, in the middle of the market, in the middle of infrastructure, township nearby to be able to draw people, so good quality capability of people there. So if you're going to be in any business, I suppose, but particularly if you're going to be in the bulk commodities, you really need to have an infrastructure solution. In the middle of the market, the middle of infrastructure, ideally, both, because you don't want to be building railways and airports and ports and stuff all over the place. I mean, life's tough enough building the mine and the processing plant. You don't want to be building all these other things at the same time. So,
Right.
so Highfield Resources, the potash project there in Spain is it's a crackerjack project, and that's at the, again, final permitting and the financing side there. And we've got a potash project over in Utah in America, and that's an SOP, a more specialty potash SOP from a brine, the Sevier player over there in the southern part of Utah. And that again is at the final feasibilities, all fully permitted, and it's good to go in terms of financing. And that'll produce SOP down for, SOP is a nutrient that you need for the macadamias, avocados, and various other fruits and berries and so on and so forth. So that's will be used down in California and Mexico and Peru and those places. So that's that particular project. So that's a bit of around the grounds there, around the world. And I should say, Andrew, that we do have a pipeline of things that we're looking at. Other projects, whether they be in Australia or Asia or North and South America or Europe for that matter. So looking at a number of things, and opportunities are there, no question about that. Yes, the prices are a bit higher, so you've got to be a bit careful about all of that. But generally speaking, they are available. So we're looking at a number of them and dealing, regularly with people. We're also looking at other platforms, whether that be the SPACs in North America or Asia or Europe, and other types of platforms, as well as the fund structure in itself. So look, we've got plenty going on, Andrew, you might say.
Absolutely. Lots going on. Pretty interesting jurisdictions, interesting focuses across the board here, Owen. So I appreciate that and encourage the folks to take a look at some of these companies and look at where you guys are focused, because I think it points to some of your views as well. And yeah, I appreciate that. That's great. How about plans over the next few years? Neither of us are spring chickens anymore, and certainly you're not a spring chicken. I suspect you really like what you're doing. If you really like what you're doing, you never retire, right? And you just keep going. Yeah, you might do less, but you just keep going, right? And what's your personal exit strategy over the next few years? And, how long will you continue to be the boss at EMR?
Again, good question. As I say, life is like riding a bicycle. If you stop pedaling, you fall off. and the other thing, Andrew, is I can't afford to go and play golf because all my buddies there keep taking so much money off me down on the golf course. So I've got to come to work, So, but look, as I said, we set this business up. It's very busy. It's vibrant. And I love it, and I've put all the people together, put all the investors together, put all the assets together. So it's my duty, it's my responsibility, it's my accountability to stick it out and look to see that they go okay. And my boys and girls colleagues here, as I say, haven't thrown me out yet, but there will be of course a transition over a period of time. But over the next 5+ years, don't see too many changes from that perspective. I mean, you've got to move with the market, you've got to move with the times, but God willing, I just look forward so much every day to coming and working with my teams here, wherever we are, whether in Hong Kong or Melbourne or all of our groups, around the world, basically. And that hasn't been simple or easy, Andrew, with COVID. You can go here, you can go there, got to quarantine, got to do this, got to do that. So it's been a bit awkward, getting around to seeing people. And that's one of the worst things about it. You haven't been able to get out and talk to people, right? Give them the confidence that you care. We're with you in this stuff, right? We're all in it together. It's a unified approach. That's just showing up. Just showing up, whether it's on site, whether it's in the community, wherever it is. It's just so important, right? To be able to give people the confidence that you do care. That you are there and supporting them, as opposed to kicking back in headquarters, Andrew.
I like that. Stay ambitious, stay hungry. Lots of fun years ahead, I think, Owen. So appreciate your thoughts on where you're headed, where EMR is headed. From your perspective, looking back over your career, Owen, what words of wisdom do you have for the 20 to 40-year-old natural resource investor, maybe for the young executive looking to build value as you have and success in this business? What words of wisdom do you have?
Yeah, look, and again, very interesting. Words of wisdom and me are a bit of an oxymoron, right? So a bit of a contradiction in terms. Having said that, one or two of the things that I have learned, and you heard me bang on about this today, that really we've got so much work to do here over the next 50 years that we can't sleep at night in our industry, right? So we're part of the problem, but we're really part of the solution, right? We have to, whether it's the technical development, whether it's encouraging and training up, capable people, whether it's making new discoveries or developing new resources, we have to do that, right? So we have to show some leadership there, and we have to grow the business and grow the people to do all that, because I'm not going to be here in 2070 when Modi says yes, we made it, we're net zero type of things. You've got to build up the team to be able to do that. So I'm always looking for people or encouraging people to see those sort of opportunities. So I would encourage people to stay with it. It does have its moving parts, it does have its volatilities, but you use them as opportunities. Use them as opportunities to develop and learn and continue to grow. But yeah, so that's one particular thing. The other thing that I should say, Andrew, in terms of what we've learnt, one of the things that I learnt at Rio Tinto was actually the very strong discipline and rigor, that you need to go about your work. You must do your work well. As they say, the best preparation for tomorrow is to do today's job superbly well. And that was one thing that we learnt there. Very, very disciplined approach to getting your due diligence done, getting your work done, because the sort of things that you're doing here, the decisions that you're making, if you're going to go into a new country or a new project or a new business, those decisions that you're sort of making there, they're going to last forever in a way, right? You're building a new mine and so on. So that's when you really have to do your best work at the very beginning here. So that's the other thing that I would say. So yeah, just those couple of things, Andrew, if that makes any sense at all.
Well said. Hold a high standard across the board and do everything well. Okay, beside yourself, we got to throw you out. Let's throw out Twiggy. We already covered Friedland, so let's throw him out. But are there any other natural resource entrepreneurs that you think people should pay attention to? Are there any names you'd like to mention? We've already mentioned Craig Perry too.
Yeah, well, I've mentioned Craig Parry, and he's an amazing person. And of course, our very own Tony Manini here. Well, Tony and Craig really part of the family in a way. Tony Manini got very good commercial and technical savvy. Technical excellence combined with commercial savvy is quite unique. So you're always looking for those sorts of people. I mean, the big guys, as you say, Robert Freeland and Andrew Forrest, and these people are just special, really. They're magicians, they're sort of one-offs, right? But the multiple people that I've worked with back in the Rio Tinto days who may not have been so much entrepreneurial as highly disciplined, experienced people, absolutely resolute. These are the things that we're going to get on with and we're going to achieve them. So we've had those, I've worked with those people in Rio Tinto, I've worked with them in Oxiana and so on. I've got the greatest respect for going all the way back to, I've been lucky enough to work with people like, Sir Val Duncan and Sir Mark Turner, who were the entrepreneur and the financier, if you like, for the beginning of the Rio Tinto group. Just amazing experience working with those people, and they're very encouraging. They were 85 levels of sort of structure above me when I was a junior analyst there, type of thing. But they're so inclusive, right? And they're always bringing in and talking and wanting to get, and they're wanting to train you up. That's what they want to do. They want to impart their knowledge and train you up, and that's very powerful learning. You don't want to bottle it up. This is mine. You've actually got to get out there and bring people into the tent and bring people along with you. Okay, I mean, there's various people here in Australia that you will know. Jim Askew, who lives in America, as well as here in Australia, just an amazing, accomplishments over a long period of time in the mining industry, from a corporate perspective and a personal perspective. The greatest respect. Again, it's discipline, it's achievement, it's staying with it. It's staying with the program, sticking it out, having that persistence. Nothing in the world succeeds like persistence, as long, as long as you're persisting with the right theme at the time. No other particular individuals come to mind other than those that we've mentioned at this time.
There's quite a few that just haven't been thought of at this very moment.
Yep.
We'll give you a break on that, Owen, certainly, because I can't name them all either. In addition to this, as we wrap up here, if you could have one magical superpower attribute in the world today, what power would that be for you?
It would probably be geological in a way. It would be I suppose, the power of discovery is one. So to be able to do that, as well as, I guess, in a way, marshal resources, marshal financial resources, and marshal people resources. So they're the challenges that we face, right? We face challenges in terms of geology, we face challenges in terms of financing, and we face challenges in terms of people. So they're the key, they're the ingredients, they're the things that they keep us busy on a day-to-day basis, right? So that's what we have to do. So, if there's any superpower way of making them easier, then we're happy to grab it with both hands. Andrew, let us know if you find one somewhere.
I appreciate that. That's great, Owen. We've got a diverse set of audiences here listening in: investors, institutions, funds, company CEOs, technical expertise, support services. A couple things here for them. Why should they pay attention to EMR and the work of their group?
Again, for all the reasons that we've been talking about here, and that is, well, we're resources people, we're mining people, we're growth people, we're value-oriented people. So we're growing value for our investors and our stakeholders generally. So we're growing value for all of our stakeholders. We think we do it very well. We think we're sort of best in class, best in show, all of those sorts of things, technically and so on. So, a bit of, I suppose, as you say, advertising. But, we've been doing it for long enough now, to know what it takes. So that's always a good thing. So we think that, and we're in the right commodity, in the growth commodities. We didn't just, pick them out of the air, throw something at a dartboard, as you've heard me bore you all to death and your listeners here with gold and copper, right? We just love it for all these reasons. So, you've got to follow those trends. They're going to be in demand commodities, and there's challenges to supply. So there's only one thing going to happen to the prices. They're going to be under tension. So we are long, and we will continue to be longer in those things. So therefore, I think that's attention grabbing, as you put it, and we're growth oriented, right? So we're not going to sort of get to the end of the fund and say, oh, thank goodness that's over. We'll go back and play golf or get back under the bed or get out of the way or something or other. We're going to keep doing it. We're going to expand our platform. So that's our plan.
At this stage, Owen, you don't have to advertise your brand. You guys certainly have shown that, and you guys have shown that expertise. So that's a nice position to be in. Best way for the interested parties to reach out to EMR Capital. What's the best way to contact?
The best way is to emrcapital.com. So it's very simple via the website. Easy, and we guarantee a response, that's for sure. So, or you can go, the people will have heard, 29 Metals, Highfield Resources, and various other sort of groups and companies within the family. So plenty of those around as well to go directly. And again, very happy. It doesn't matter to have to be a stock or invest in the fund or invest in 29M or so on and so forth. Just a general question. We heard you say something about Sir Val Duncan. It was he. Well, so we're always up for a bit of a chat and open for those sort of questions too, Andrew.
Oh, and this has been great. Always a pleasure to speak to good people of your caliber, and stay well out there, and you're welcome back anytime.
Well done. Really appreciate it. And congratulations, by the way, to you and the Smith Weekly program. Really, really good. And, I know that you will go from strength to strength. And it's been a great pleasure talking with you today. Thank you, Andrew.